Hi, this is Daniel DiTuro. Are you considering buying gold to hedge against inflation? In this video, I'll share why invest in gold, gold versus real estate and stocks, gold and capital gains tax, the cost of owning gold, and is gold a good investment for you? Gold has been cherished for thousands of years. It's a highly corrosion-resistant precious metal. Precious metals include the well-known gold, platinum, and silver, and some that are not so well known. There are several reasons to invest in gold. They include a hedge against inflation, diversified portfolio, easily bought and sold, and protection against economic collapse. Gold sellers usually emphasize a hedge against inflation and safer than investing in stocks. They claim buying gold protects your savings against inflation. Is gold a good investment against inflation or just marketing hype? While gold is safer than stocks, is it a better investment? As we have seen, high inflation and interest rates have a negative effect on stock prices. High inflation increases home values, but also increases mortgage interest rates. Gold, like other precious metals, is a commodity. Like all commodities, its price is affected by supply and demand. When demand is high, gold prices increase. When demand is low, gold prices decrease. This ad for gold coins states a $150,000 investment in 2000 would equal over $1 million today. Very few Americans had $150,000 to invest in 2000. If you had invested $150,000 in gold in 2000, it would have bought about 650 ounces. At today's price, 650 ounces is worth over $1 million before taxes. That's an increase of 756% in 22 years. With few exceptions, gold price appreciation over the past 22 years outperformed real estate. It also outperformed the Dow Jones Industrial Average. But if you had invested $150,000 in tech or social media stocks, it would be worth several times the value of gold. A $150,000 investment in Microsoft in 1995 is worth over $10 million today. You'd also receive about $120,000 a year in dividends, 80% of your initial $150,000 investment. Gold pays no interest or dividends. Over the past 50 years, fluctuation in gold prices is greater than that of the Dow. Like real estate and stocks, gold and other precious metals are a capital investment. Unlike interest and dividends that are taxed as ordinary income, selling gold can produce a capital gain or loss. Selling gold for less than the purchase price produces a capital loss. Capital losses can be used to offset capital gains. In the U.S., current long-term capital gains tax rates ranges from 0 to 20% based on adjusted income. Long-term applies to assets held more than 1 year. The maximum tax on $50,000 of gold capital gain is $10,000. If you owe capital gains tax, you should make estimated tax payments. Otherwise, you may owe a penalty for underpayment of tax. Keeping $1 million worth of gold around the house is inadvisable. Gold bars, coins, and jewelry are easily sold. You can store gold in a bank safe deposit box. but you'll also have to insure it against theft. A better option is storing gold in an authorized depository or vault. Authorized depositories usually include insurance in their storage fee. Most investments have some risk. Conservative investors who keep all their savings in bank accounts usually do not keep up with inflation. People investing in high-quality stocks and mutual funds receive higher returns that outpace inflation. Owning a home is usually a better investment than renting a home. Most people own gold in the form of jewelry. The high markup makes gold jewelry a bad investment. While investing in gold is safer than stocks, it's not a guaranteed hedge against inflation. People who bought gold at its high in 2011 lost money, even if they sold it in 2020. 10 years of inflation reduced its buying power. The seller of these gold coins conveniently conceals the amount of gold per coin. Based on the $225 price per coin, each coin most likely has 1/10 ounce of gold. At $1,745 per ounce, or $175 per 10th ounce, the seller makes $50 per coin. You pay $225 for $175 worth of gold. To make money, gold prices must exceed $2,250 per ounce. That's over $500 above current gold prices. A diversified investment portfolio of stocks, bonds, and commodities can hedge against inflation and uncertain times. Ignore marketing hype using historically low gold prices. Like any investment, past performance does not guarantee future performance. Please leave a comment if you have any questions about this video. Thank you for watching.